Documents. Email and residential sales comparison and income approaches. Help. Documents. Email instructor. CH for procedures of the sales comparison approach, partial interests, and real property rights. PG for Fannie Mae. Notes print. Leave a comment. Fannie Mae. The Fannie Mae Selling Guide states B4-1.3-09 Sales or Financing Concessions. The amount of the negative dollar adjustment for each comparable with sales or financing concessions should be equal to any increase in the purchase price of the comparable that the appraiser determines to be attributable to the concessions. The need to make negative dollar adjustments for sales or financing concessions and the amount of the adjustments to the comparable sales is not based on how typical the concessions might be for a segment of the market area. Large sales or financing concessions can be relatively typical in a particular segment of the market and still result in sale prices that reflect more than the value of the real estate. Adjustments based on dollar-for-dollar deductions that are equal to the cost of the concessions to the seller, as a strict cash equivalency approach would dictate, are not appropriate. Fannie Mae recognizes that the effect of sales or financing concessions on sales prices can vary with the amount of the concessions and differences in various markets. Adjustments must reflect the difference between what the comparables actually sold for with the sales or financing concessions and what they would have sold for without the concessions, so that the dollar amount of the adjustments will approximate the reaction of the market to the concessions. Positive adjustments for sales or financing concessions are not acceptable. For example, if local common practice or law results in virtually all of the property sellers in the market area paying a 1% loan origination fee for the purchaser, and a property seller in that market did not pay any loan fees or concessions for the purchaser, the sale would be considered as a cash equivalent sale in that market. The appraiser must recognize comparable sales that sold for all cash or with cash equivalent financing and use them as comparable sales if they are the best indicators of value for the subject property. Such sales also can be useful to the appraiser in determining those costs that are normally paid by sellers as the result of common practice or law in the market area. End of page. Chapter start. 18%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH for procedures of the sales comparison approach, partial interests, and real property rights. PG5 when to make adjustments. Notes print. Leave a comment. When to make adjustments, adjustments only need to be made, and should be made, when there is a significant, measurable difference between the subject property and a comparable sale. By measurable, we mean measurable in the marketplace. It needs to be significant enough so that a typical purchaser would recognize this difference and take it into consideration in the buying decision. There are 22 lines in the sales comparison approach grid in the URAR appraisal form. This does not mean we are expected to make 22 adjustments. We have to understand buyers' and sellers' motivations in the particular market area where the subject is located. End of page. Chapter start. 18%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH for procedures of the sales comparison approach, partial interests, and real property rights. PG6 mathematical precision. Notes print. Leave a comment. Mathematical precision. The trap that many appraisers fall into is that they use math to calculate a precise number and then utilize that number. We have to walk a fine line between being accurate and too precise. We cannot let the power of the math overrule our own judgment and decision-making. It's easy to plug numbers into an equation or software and believe that the resulting answer is 100% accurate. We need to proceed logically, and math is one way to prove a point. We can apply mathematical techniques to narrow the range. Then it's time for us to utilize our own knowledge and experience in reconciling to the final opinion of value. There's no substitute for our own best judgment, based on the best research and analysis. End of page. Chapter start. 19%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH for procedures of the sales comparison approach, partial interests, and real property rights. PG7 sequence of adjustments. Notes print. Leave a comment. Sequence of adjustments. Sequence of adjustments is defined in the Dictionary of Real Estate Appraisal, 6th edition, as the order in which quantitative adjustments are applied to the sale prices of comparable properties. The sequence of the adjustments is determined by the market and through data analysis. However, there are generally accepted sequences that are utilized by most appraisers. These will work for you most of the time. If there are particular factors in a local market that call for emphasis of particular factors that are more important in extenuating circumstances, then you may modify the normal procedure with detailed explanation. End of page. Chapter start. 19%.
Here's an example of an acceptable sequence of adjustments that is illustrated in the Appraisal of Real Estate 15th edition, published by the Appraisal Institute in 2020. 1. Property rights appraised. 2. Financing terms and cash equivalency. 3. Conditions of sale. 4. Expenditures made immediately after purchase. 5. Market conditions. 6. Location. 7. Physical characteristics. 8. Economic characteristics. 9. Use and zoning. And 10. Non-realty components of value. The first 7 elements in the sequence apply to all kinds of properties. The last 3 elements apply primarily to income-producing properties. Economic characteristics include all the attributes that influence income. This would include such items as operating expenses, tenant mix, lease terms, etc. Use and zoning also deals with income-producing and commercial properties where adjustments could be made for differing values indicated by differing intensities of use. A parcel that would allow 20 units per acre would be worth more than one that would allow only 10 units per acre. The 10th and last item, non-realty components, refers to personal and business assets, such as furniture in a hotel and fixtures in a restaurant. We will confine ourselves in this course to looking at each of the first 7 possible adjustments in this and the following chapters.